If you're holding XRP, you'll want to watch this video carefully because what's happening right now in the United States isn't just another crypto headline, it's a shift. And in crypto, the people who notice shifts early are usually the ones who benefit the most. While most of the market has been distracted by Bitcoin price swings and meme coins, something much quieter has been unfolding behind the scenes. It involves regulation, the SEC, and how digital assets like XRP may be treated moving forward. For years, the SEC and Ripple have been locked in a legal battle that created massive uncertainty around XRP. That uncertainty alone kept many US investors and institutions on the sidelines. Not because they didn't see potential, but because regulation matters, especially in America. Recently, however, the tone coming from regulators and legal developments has started to change. This doesn't mean everything is suddenly resolved, and it definitely doesn't mean guarantees. But it does mean the conversation around XRP is no longer what it used to be. Instead of constant enforcement first messaging, we're seeing more discussion around clearer frameworks, clearer rules, and how digital assets can fit into the existing financial system. That distinction is important. XRP, unlike many crypto projects, was designed from day one with payments and cross-border transactions in mind. Speed, low fees, and scalability were always part of its core design, and those features matter much more when regulators start focusing on real-world utility rather than speculation. Another thing worth paying attention to is institutional behavior. Large financial players don't move based on hype or emotions. They wait for clarity, they wait for reduced risk, and historically, regulation clarity has been one of the biggest green lights for institutional involvement. We've already seen this pattern before in traditional markets. When rules become clearer, participation increases. Crypto is no different. Now, it's important to be very clear here. This video is not telling you to buy or sell anything. This is about understanding market structure, regulation trends, and why certain assets gain attention during specific phases of the market. Short-term price movements can be unpredictable, but long-term narratives are usually built on fundamentals, adoption, and regulation. Another reason XRP keeps coming back into the spotlight is its positioning in global payments. As governments and financial institutions explore faster settlement systems, assets that already operate at scale naturally attract attention. At the same time, US policy discussions around digital assets are becoming more serious. This isn't about banning crypto anymore, it's about defining it, and once definitions exist, markets tend to react differently. Many retail investors underestimate how powerful regulation clarity can be. It doesn't create instant pumps, but it creates confidence. And confidence is what attracts long-term capital. If you've been wondering why XRP continues to trend during regulatory discussions, this is a big reason why. It sits right at the intersection of technology, finance, and regulation. That doesn't mean there aren't risks. Every investment carries risk, and crypto is no exception. Volatility, market cycles, and policy changes can affect prices in both directions. But understanding why an asset is being discussed is just as important as watching its price. So instead of asking, how high will XRP go? A better question might be, why does XRP keep being part of the regulatory conversation? Because in markets, relevance often comes before results. If you found this breakdown helpful, consider liking the video. It helps more than you think. And if you want calm, fact-based crypto discussions focused on the US market, make sure you're subscribed, stay informed, stay rational, and I'll see you in the next one.